Man, the crude oil market, huh? It's been throwing us some real curveballs. I mean, prices haven't just dipped, they've completely fallen off a cliff.
Yeah, it's a real nosedive.
And, if you're anything like me, you want to figure out what's going on, like what's causing these huge swings, right?
Yeah.
And we want to do that quickly so we can make sense of it all. So, welcome to the deep dive, where today we're going deep, really deep into this recent crude oil price collapse.
Right.
We're going to look at everything, the market trends, the supply and demand situation, the bigger economic picture, the geopolitical stuff, and try to figure out what's coming next. And we've got this really in-depth trading analysis to help us, covering the week starting April 7th, 2025.
Okay.
It's full of technical data, and it dives into the fundamentals, the forces that are really moving the market. And our mission here is pretty simple, right? We're going to try to pull out the key insights from this report so you can really understand what's happening in the oil market.
I like it.
And just to show you how wild things have been, get this. We saw a single-day drop of 7.4%. That's the steepest drop since 2022. It's a big deal. All right, let's jump into the details.
All right, let's do it. Yeah, this report really paints a clear picture of a market in a sharp downturn.
Yeah.
I mean, to give you some context, crude oil prices basically went from like $72 a barrel all the way down to around $62 in just a few days.
Wow.
Yeah, and that 7.4% drop on April 4th, that really shows you how fast and how strong this selling pressure is. This is a huge signal. It means something's changing. Like the whole market sentiment is shifting.
Yeah, absolutely. And the report, it points to a couple of major things that really knock the wind out of oil prices. It looks like it's this combination of increased oil production from OPEC plus make and those new U.S. trade tariffs that were just announced.
Yeah, for sure.
Anytime you get announcements like that, it makes the market nervous. People start wondering what's going to happen to the global economy.
Yeah, creates a lot of uncertainty. And speaking of things that make people nervous, let's look at the technical picture for a minute. If you step back and look at the weekly chart, it's screaming bearish momentum. The price right now, it's around $61.99, and that's way, way below all the major long-term averages.
Right.
The 20-week average is up at $70.68. The 50, again, because it's $73.76, and the 100-week average is all the way up at $80.48.
Right. So we're trading well below all of those.
Yeah, and this break below these averages, it's a big signal. It tells you that this might not just be a temporary dip. This could be something more serious, something fundamental changing.
Okay, so these averages, they were acting kind of like a floor holding the price up.
Exactly. But we broke through those support levels.
And what are those key levels?
Well, the report points out $60.45 is the recent low.
Yeah.
Then we've got that big psychological level at $60 right below that.
Yeah.
That could be another potential floor.
Right. So those are the levels to watch on the downside. What about if the price tries to bounce back?
Well, on the upside, that $70, $71 area that used to be support, now it's likely going to act as resistance. It'll be hard for the price to get back above that.
Okay, so we've got some key levels to watch there. And you mentioned something else earlier about the volume. You said that was really telling. What's so significant about the volume in this sell-off?
Oh, the volume. Yeah, it's huge. The report specifically says there was significantly higher volume during this sell-off. And think of volume as like the energy, the conviction behind a move. High volume on a sell-off means a lot of people were really rushing to get out, confirming that bearish sentiment. This wasn't just a few people quietly selling. It was a stampede.
Right. Okay. So it wasn't just a couple of people heading for the exits. It was a whole crowd.
Exactly. And to make things even more interesting, the report mentions a possible bear flag forming on the weekly chart. And, that's not a good sign if you're hoping for a quick rebound.
Okay, so let's talk about this bear flag thing for a second. For anyone who's not familiar with chart patterns, what does that mean?
Right. So to imagine like a flagpole on a flag. The flagpole is that sharp drop down. Then you get this little sideways consolidation like the flight part.
So the price kind of pauses, but at a lower level?
Exactly. And usually a bear flag means that initial drop, the flagpole, it's likely to be followed by another big move down.
So after that pause, it could drop even further.
Yeah, exactly. So, this potential bear flag pattern, it's another sign that things could get worse before they get better. And the report also points out that crude oil is trading near its lowest levels in the past 3 years. So this isn't just a blip,
Yeah, that puts things in perspective. So we've looked at the weekly chart, which gives us that bigger picture. Now let's zoom in a bit to the daily chart. What does the report tell us when we look at things on a shorter time frame?
The daily chart, it's basically telling the same story, same bearish story. We saw this sharp red candle on the chart, closing near its low for the day, $61.99. It was almost $5 drop in a single day. Yeah, pretty big move. And just like on the weekly, the price is trading below all those important daily moving averages. The 20-day at $68.08, 50-day at $69.80, 100-day at $72.50. They're all above the price now.
Right. So those moving averages, which a lot of traders use, they're like potential support or resistance levels, right?
Exactly. And now they're all above the price. So if the price tries to rally, those averages could act as resistance, making it harder to go up.
Right. Okay. So we've got potential resistance above. What about potential support? Are there any key levels to watch on the downside?
Yeah, the report mentions a support level at $60.45. That was the low from April 4th. And then below that, there's another potential support area around $58 to $59.
Okay. So if the price keeps dropping, those are the areas to watch for potential buyers to step in.
Right.
We talked about the volume spike on the weekly chart. Did the daily chart also show high volume?
Oh, yeah, it was huge, like massive spike in volume on the daily chart, too. 528,169 contracts traded compared to the average of 296,164. I mean, that's a really big jump. It shows you just how strong the selling was that day.
Right, right. So that confirms the strong selling pressure. But there's one interesting thing the report mentions. It says the RSI, the Relative Strength Index, is getting close to oversold territory on the daily chart. Now, what does that mean?
Right, yeah. So the RSI, think of it like a momentum indicator. It measures how quickly and how much the price has moved. And when it gets into oversold territory, it can mean that the selling, it might have been a little too much, too fast in the short term.
Okay, so it's like the market's getting a little tired from all that selling.
Exactly. It could mean we might see a pause or even a little bounce.
Yeah.
But, and this is important, the report cautions us. Because we had such a big breakdown, any bounce, we got to be careful. It might not mean the downtrend is over.
Right, it could just be a temporary thing. Okay, so we've looked at the big picture on the weekly and daily charts. What happens when we go even deeper into the intraday timeframes, like the 4-hour and 1-hour charts? What does the report tell us about those?
It's pretty much the same story, even on those shorter timeframes. The 4-hour chart shows the sharp drop, followed by a bit of sideways movement. But crucially, the price is still below the 20-period and the 50-period moving averages on that time frame. And on the 1-hour chart, same thing. Weakness, selling pressure, not a lot of buying.
And are there any important support or resistance levels on those shorter-term charts?
Yeah, there are a few. The report mentions a support level around $61.23. That was a recent low. And on the upside, the first resistance is around $63.71, which is right around the 20-period moving average on the 1-hour chart. And then above that, the 50-period moving average, around $66.63, that could act as resistance too.
Okay, so support below, resistance above. And I noticed the report also mentions a pattern on the 1-hour chart, something called a falling wedge. We talked about the bear flag earlier.
Yeah.
What's this falling wedge all about?
Right. A falling wedge, it's actually a pattern that sometimes signals a potential reversal, a move upwards. It forms after a period of decline, and the price gets squeezed between these two downward sloping lines.
So the price is kind of getting squeezed lower and lower?
Exactly. And that can mean that the downward momentum is weakening, and the price might be ready to break out to the upside.
Okay, so it's like the pressure is building up and it needs to release somewhere.
Yeah, that's a good way to think about it. And the report mentions this as a possibility for a short-term bounce. But again, got to be careful. This is all happening within a bigger downtrend. So even if we get a bounce, the sellers, they're probably still in control overall.
Right, so even if we see a bounce, it might not last very long. Okay, that was a really good explanation of the technical side of things. But, price charts, they only tell part of the story. Let's shift gears now and focus on what's fundamentally driving this price collapse. And the report really highlights two main things: those U.S. tariff announcements and the decision by OPEC Plus to increase oil production. Let's start with those tariffs. How do those impact the global economy and the demand for oil?
Well, those tariffs, they've really injected a lot of uncertainty into the economic outlook. The U.S. announced a 10% tariff on pretty much all imports, and some countries might even face higher tariffs. And when you make imports more expensive, well, that can have all sorts of negative effects.
Right. It's like putting a tax on all sorts of goods coming into the country.
Exactly. And that can lead to less international trade, companies, and people might buy less stuff because it costs more. And then you could get higher inflation because those higher costs, they get passed on to consumers. And ultimately, it could slow down the entire global economy.
Right. So tariffs, they can actually put the brakes on economic growth.
Yeah, that's the worry. And since the demand for oil, It's tied to how well the economy's doing. Any slowdown means less demand for oil. Businesses need oil for transportation, for manufacturing. People use it for travel. Less economic activity, less oil demand.
Right. So those tariffs, they're not just about trade wars. They're actually creating this whole cloud of uncertainty over the future demand for oil.
Exactly. And then you add the OPEC Plus decision on top of that. They decided to actually increase oil production, which is the opposite of what a lot of people were expecting.
So the market was hoping they would hold back production to support prices.
Yeah, a lot of people were thinking they would keep managing the supply like they've been doing for a while now.
Yeah.
But nope, they decided to increase production. And when you have more oil available, especially when you're already worried about demand weakening, well, it creates an imbalance. Too much oil, not enough buyers. That puts downward pressure on prices.
Right. So it's like a double whammy. Worries about lower demand because of those tariffs, and then at the same time, more oil flooding the market. No wonder we saw those big price drops.
Yeah, it's not a good combination.
Now, the report also talks about this idea of panic selling. Does the report give any clues about whether the selling was driven by actual changes in supply and demand, or if it was more about, fear and emotion taking over?
Well, the report doesn't have specific numbers on current oil inventories, like from the EIA, the U.S. Energy Information Administration. But
we can kind of read between the lines.
Exactly. The fact that the price dropped so much so quickly after that OPEC Plus news, it tells you that the market thinks there's already enough oil out there, maybe even too much. And the idea of even more oil coming, well, it just makes everyone even more bearish.
So even without the exact inventory numbers, the price action itself is telling us something.
Yeah, it's like the market is speaking, even if it's not using words.
Right. Okay. Now, the report also has some interesting forecasts and projections. It mentions an expert prediction that Brent crude oil will be trading at $73.69 by the end of the second quarter of 2025. Now, that's according to Trading Economics. But right now, WTI crude, which is the U.S. benchmark, it's trading around $62. So there's this pretty big difference between what they expect Brent to be and where WTI is right now. What does that tell us?
Yeah, that's a good point. That difference between Brent and WTI, it's significant. Brent is often seen as the international benchmark. It reflects what's going on globally, while WTI is more focused on the U.S.
So it's like they're both measuring oil prices, but they're looking at different parts of the world.
Exactly. And when you see a big difference between them, it can mean a few things. Maybe there are different levels of supply in different regions, or problems with transportation, or maybe there are specific risks in one region that aren't affecting the other.
So it's not just about the overall price of oil. It's also about where that oil is and what's happening in that specific region.
Right. And in this case, the fact that Brent is expected to recover more strongly, it suggests that maybe those things pushing down WTI, they might be more of a U.S. problem, or at least they're perceived that way.
Right. So the problems in the U.S. might be worse, or at least people think they're worse, than the problems in other parts of the world.
Yeah, something like that. So even though the overall mood in the oil market is pretty bearish right now, there are these regional differences to keep in mind. It's not all the same everywhere.
That's an important point. Okay, so we've got the technical picture, the fundamentals, and now we're starting to look at the regional differences. What about market sentiment overall? How are traders feeling? Is everyone bearish, or is there any hope for a rebound?
Well, the report says the sentiment is definitely bearish. I mean, all the technical analysis across all the different time frames points to a downtrend. But remember that RSI we talked about earlier, the one that's getting close to oversold?
Right.
That could mean we get a little bounce.
So even though the overall trend is down, we might see a temporary move up.
Yeah, exactly. It's like, imagine you're on a roller coaster. You're going downhill fast, but then there's a little bump that throws you up for a second before you keep going down.
Okay, that's a good analogy. So even though the big trend down, we could see these little bumps along the way.
Right, and the report actually talks about something called contrarian indicators. These are things that, well, they kind of go against the crowd. And one of these indicators is the extreme volume we saw. The fact that everyone was selling so aggressively, it could mean that most of the selling is already done.
So it's like, if everyone who wanted to sell has already sold, then there's no one left to push the price down further.
Yeah, that's the idea. And that could create an opportunity for the price to bounce back. But it's important to remember, this is a risky strategy. Just because there's been a lot of selling doesn't guarantee a reversal.
Right. So it's something to watch for, but not something to bet the farm on. Okay, now, Let's talk about how crude oil relates to other markets. The report looks at gasoline, and it notes that gasoline prices are down significantly compared to a year ago. And they're moving in the same direction as crude oil, down. That makes sense, right?
Yeah, makes perfect sense.
Yeah.
Gasoline comes from crude oil, so their prices are usually pretty closely linked. When crude goes down, gasoline usually follows. And the fact that gasoline is also down a lot year over year, it tells you that the demand for oil products overall, it's weakening.
So it's not just about crude oil, it's the whole oil complex.
Well, it's just a broader trend.
Now, the report also looks at natural gas, and it points out that natural gas is actually up quite a bit compared to last year. So we've got crude oil and gasoline down, but natural gas is up. What's going on there? Why is natural gas behaving differently?
Yeah, that's a good question. Natural gas, it has its own unique factors that influence its price. Sometimes it moves with crude oil, sometimes it doesn't. Things like weather patterns, they have a huge impact on natural gas demand because people use it for heating. Geopolitical events, production levels in different regions, storage capacity, all these things can affect natural gas prices independently of crude oil.
So even though they're both energy sources, their markets can behave very differently.
Right. They're related, but not always connected. And the report doesn't give specific reasons for this particular divergence, but it does say that whatever is pushing natural gas prices up right now, it's outweighing those broader economic concerns that are dragging down crude oil.
Interesting. So it's like natural gas is in its own little world right now, immune to the problems affecting crude oil.
Yeah, for the moment, it seems that way.
Finally, the report mentions equity markets, the stock market. And it suggests that those broader economic concerns, especially those tariffs, they're probably hurting both stock prices and energy prices.
That makes sense too, right? Tariffs create uncertainty, and that can hurt company profits across all sorts of industries.
Exactly. It's all interconnected. While the report doesn't give specific data on how closely stocks and energy are moving together right now, the logic is sound. Tariffs can make investors nervous, they can reduce business investment, hurt consumer spending, and that can impact both the stock market and the energy market.
So the troubles in the oil market, they're not happening in isolation. They're part of a bigger story about the global economy.
Yeah, it's all connected.
Okay, we've covered a lot today. We looked at the technical signals, the fundamentals of supply and demand, market sentiment, how crude oil relates to other markets. Let's try to summarize all of this. What are the key takeaways for our listeners? What do they need to know about this crude oil price collapse? Okay, so the big picture is this. The sharp drop in prices, it looks like it's being driven by two main forces. More supply coming from that OPEC Plus decision, and worries about future demand because of those U.S. tariffs. Technically, the charts are showing strong downward momentum with the price breaking below important support levels. We might see a bounce because the RSI is oversold, but the overall trend is still down.
So we've got this kind of tug of war going on. Some things are pointing to a potential bounce, but the bigger forces are still pushing the price down.
Exactly.
Now, based on all of that, what does the report say about what we can expect next week, starting April 7th?
The report gives a primary bearish outlook for the week ahead, with a 70% probability of further price declines.
Okay, so the report is leaning towards lower prices.
Yeah, it's saying that the most likely scenario is that the price keeps dropping. But it does give a 30% chance of a relief bounce, mainly because of that oversold condition we talked about.
So it's not ruling out a bounce completely.
Right. But even if we get a bounce, the report thinks it'll be temporary.
Okay, so what are the key price levels to watch, both for further declines and for a potential bounce?
On the downside, the report highlights these targets. $60, then $58.50, and even possibly $55. If the price keeps dropping, those are the levels to watch.
Okay, so those are the potential floors. What about the ceiling? If we get that relief bounce, where might it stop?
For the bounce, the resistance levels are $63.71, then $66.63, and that big one at $68.08. If the price rallies, those are the levels where it might run into trouble.
All right, so we got our downside targets and our upside targets. But what about those invalidation points? Those levels that would tell us that maybe our outlook is wrong.
Right, so for the bearish view, the invalidation point is $68.08. If the price manages to trade above that level consistently, then maybe the downtrend is over.
So that's the line in the sand for the bear.
Exactly. And for the bullish bounce scenario, the invalidation point is $58.50. If the price breaks below that, then the bounce is probably over.
Okay, so we know what to watch for. And finally, how confident is the report in its bearish outlook?
It gives a trading confidence score of 7 out of 10.
So pretty confident.
Yeah, pretty high. And the reasons are the strong technical breakdown we've seen, the fact that the fundamentals support the bearish view, and the potential for a bounce is limited. But there's always a chance of unexpected news, especially over the weekend. That's why it's not a 10 out of 10.
Right, so the report is confident, but not overconfident. It recognizes that the market can always surprise us. Well, this has been a really insightful deep dive. We've learned a lot about the forces shaping the crude oil market, both the technicals and the fundamentals.
Absolutely. And yeah, it shows just how complex this market is.
It definitely does. Now, before we go, here's a final thought for everyone listening. We talked about that difference between the current price of WTI and what they expect Brent to be in the future. So, here's the question. What could happen in the next few weeks that would either close that gap or make it even wider? Think about the decisions being made by oil-producing countries, the trade situation, the global economy. It's a lot to consider, but it's definitely something to keep an eye on. Thanks for joining us on The Deep Dive.
Thanks for having me.
We'll see you next time.